Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. As I do with every video, I want to say thank you to all the supporters on the channel, all the subscribers, all the viewers, everyone showing the channel so much support. Immensely appreciate that. And I want to do a special thanks to everyone who's been posting welcome back messages on my last few series of videos. Immensely appreciate that. It's good to be back, and I hope to continue posting on a more regular schedule on YouTube. Hopefully 5 to 7 videos a day. The goal is to do a daily video, but that may be a little bit difficult to do with the editing that's required for these videos, but I'll try to do my best to get out content for you guys on a daily basis. For today's video, I thought I'd jump back into the portfolio and do another options trade with Boeing. I've been having a lot of success, and I want to go through and detail every one of these transactions. So let's go ahead and go back in and do another options trade. As you can see here, the portfolio has dipped a bit here, currently trading around 340,000, 348.19 currently. It's a little bit of volatility yesterday, and today you can see that big drop off with the portfolio. At one point up around 350, 351, getting down to 336, currently 340. So a little bit of a pullback in the market, but let's go ahead and jump into the portfolio to review some of the options trades and then put in another options trade for Boeing. You can see the current trades in the middle there for options. Vanguard, this is a very good way of telling what the market is doing overall. This is a large collection of stocks in one stock, an ETF or exchange traded fund. You can see here a little bit of a pullback. Over 3 months, it's still up. 1 year, that big pullback after the coronavirus, dipping quite substantially. But as you can see on the right of the graph there, the performance has all but erase those losses. It's actually up since the peak prior to the coronavirus pandemic, so quite surprising there. A very quick and robust response in the economy. But let's go ahead and take a look at some of the options here. You can see Boeing BA 200 call, currently 12 cents per contract. If I wanted to buy those back, it would be $132 market value. Again, each contract is 100 shares, so 1,100 shares. I had an average credit of 50 cents per share, so I could actually go ahead and buy these contracts back for 132 and make a swing trade. You can see that options premium on the bottom that I got for the 925 call, September 16th, $550. And again, I could buy those back for 132 to do a swing trade on the options contract itself. And here's that longer term call for Ford, $7, or excuse me, longer term put option for Ford, $7. That was over a year. There'd be a little bit better tax savings on this particular account. And again, if I wanted to buy these contracts back, I could spend $750 to buy those back. But you can see I only had an average credit of 41 cents per contract, so I'd go ahead and lose money on that contract if I did want to do that. But you can, again, buy and sell those contracts just like you would a stock. But let's go ahead and jump back into Boeing here. Currently trading at 156.44. Quite a large pullback, as you can see here, currently down 2.9%. 1 week down 6.29%, 3 months it's trending down here 17.36%, and you can see an overall trend down, a little bit of variability from day to day, up and down pattern, but the overall trend is definitely a downward trend over the last 3 months of trading. Again, you can see that big pullback in March, down at 1.74, 75%. You can see the orders here, a very large pullback in March after the coronavirus pandemic. And a little bit of a rebound, and then trending down, like I said, over the past 1 month to 3 months. They're trending down a little bit over the past 1 month or so. But let's go ahead and jump into options. Again, you can see up on top there, sell put. This would be a contract in which I would receive an options premium, but I would be required to buy a particular number of contracts on a particular expiration date. Again, PUT is kind of like BUI, so when you're selling those off, you're required to buy a contract. Call, CALL, it's like SCLL. When you sell off these contracts and get an options premium, you're required to sell a stock at a particular price. And you can see this particular contract, for example, 155 call, 926. If I put those in, you can see on the bottom there, I'm agreeing to sell these contracts, 100 shares for 155 each before or on September 25th. That is the strike price. If you aren't asked to sell BA by then, you'll keep your collateral and the full $490 credit. So you keep that options premium, and the contract simply expires at that point. And that's what most of my contracts do. There's very few contracts that actually execute which I'm required to buy a stock or sell a stock at a particular price. You can also buy these contracts. This is exactly the opposite if you sell. You're essentially selling to another investor who's buying those contracts from you. And again, you can see on the bottom here, this would be a situation in which I would have to pay $595 to another investor. They would be required to do the opposite of the contract. So for example, if I sold off a call, the seller, the person who gets the options premium, is required to sell a stock at a particular price. If I bought these, I could buy a stock if I wanted to at a particular price. I am the one at that point who would be deciding whether to execute that trade or not. If you sell them off, you're at the mercy of the other investor. You can't choose to do it or not. If they want to do it, it simply executes. But if you are in the money, as with regards to the seller, those simply expire, because if they were executed, you'd actually make more money than if it simply expired. So for example, this particular contract, to sell this off, the investor would pay $495, and then as you can see on the bottom, you're paying $495 for the right to buy 100 shares of Boeing for $155 each by September 25th. If Boeing shares aren't $155 or higher on September 25th, this option will expire worthless, and that's automatically done because there'd be no sense in executing that contract. The buyer would actually lose more money than what they paid for the contract. So again, if you buy a contract, you have the right to execute it or not. If you sell off a contract, you have the obligation. You cannot decide whether to do that or not. So a couple different ways in which you can buy and sell contracts. And again, as I detailed in prior videos, this is the simplest way of doing this. There are much more complex contracts you can do with options. There's a whole number of different strategies out there. I try to keep it very simple, and I typically like to be the investor who sells off the contract, or basically shorting the contract, selling it off, getting the premium, and hoping it just simply expires worthless. But again, I put in these contracts on prices that I'm more than willing to buy or sell a stock off at a particular price. If I wasn't, I would not put in the contract. Again, here's a BA Boeing 155, 925, one contract, 345 per share, one contract is 100 shares, so 345 with the limit price of 345 per share. And there's a number of different price points and a number of different expiration dates. Again, you can buy, this would be simply the opposite of that. So you would be paying another investor for the right to sell a stock to them. They would have to buy the stock from you at a particular price. So again, if that is confusing, please take a look at some of my prior videos. I will be putting out, hopefully in a couple of weeks, another updated video going through this in a much more detailed fashion, going through this very slowly on the basics behind selling off options, both calls and puts, as well as buying both of these as well, calls and puts, and what the difference between the two different transactions are. And I also will go through some of the ways in which you can find a particular contract. Basically, with these contracts, you're trying to mitigate risk on a larger portfolio. And with the contracts themselves, there's ways in which you can also manage risk. Everything's about risk in the stock market. The more risk there is, the more reward that you will potentially receive, but you can also have a loss as well. Again, just kind of going through some of these, giving you guys a little bit of an idea how you can put these contracts in. Here's another one for 155. But let's go down a bit. I don't want to be too aggressive with the contracts. Maybe around 148, 147 would be a good price point to get in. Again, the lower down you go on these contracts, so the less likely that the contracts will execute. You can see the options premium also decreases as well. Again, a put, if you sell it off, you have to buy stocks at a particular stock price. So the farther that you are away from the share price currently, the less options premium that you will receive. Again, 8 contracts here, $13.92. If you were to go away from the share price, those options premiums would decrease. But again, the risk is also less as well. You would potentially be less likely to have a contract execute, and then you'd be required to buy a stock if you do a sell put, or sell a stock if you do a sell call. And again, the terminology can be quite confusing, but let's go ahead and jump into a trade here. So again, this is live trading with a white background to the portfolio. Let's jump in at a price point around 148, 149. You can see the 149 put contract here. If I were to execute this, I would receive $1,144 as an options premium. But let's go ahead and do maybe 148. I think that'd be a very good price point to get in. with Boeing. Again, you're trying to mitigate risk with these contracts. So if I did 8 contracts at $123 per share, again, each contract is 100 shares, I'd have a credit of $984. If it's 122, $976. You can see the collateral on the screen as well, $118,400 for 148. Let's go ahead and execute that. You can see the trade there done. And if we go down in the portfolio, since this was an open market contract, it should have executed right away. So as you can see here, Boeing currently trading 156. As we scroll down, you can see the 148 put has executed, 122 per share. And if we scroll down, you can see the price that I would be required to buy it back, essentially the same price at this point. And if we go all the way to the bottom, you can see that options premium, 148 put sell, $925, $976. 8 contracts, 800 shares at 122 per share. And again, you can see the price of this will fluctuate throughout the day. As the price of the stock decreases, the options premium increases because there's a more likelihood that the contract will execute, and as the price of Boeing increases, the price of the premium decreases. And what I'm hoping on this is that the price of Boeing increases, the contracts will become less expensive. I could buy those back and actually make a little bit of money on a swing trade, or I can simply keep those until the expiration date, which will be on Friday, to hopefully have a very nice trade here. But again, a lot of this depends on the price of Boeing. If it continues to drop, it may drop below my strike price, and I will be required to buy Boeing. But again, I'm more than happy to buy Boeing at 148. I think there is a lot of volatility in the short term. It could trend down further, but longer term, I think it's a great stock after the economy gets rolling again and people start using airlines. Boeing will definitely pick up at that point. And there's a lot of government contracts with Boeing as well. It's very difficult to get into the aerospace industry, so it's a very protected segment of the economy. So again, just wanted to go through some of the trading on the portfolio. I don't want to make the video too long, so I'll kind of end it here. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. If you have a great idea for a video, let me know in the comment threads down below, and I'll do my best to get out a video for you guys. So until then,